Good afternoon, everyone. My name is Jeanmonod, Regional Sales Manager for Angel Oak Mortgage Solutions. We're going to get started here in about a minute. We're going to let everyone get signed on here soon. We'll go through our agenda, what we want to accomplish here today, and we'll get started here in about a minute. We see some people logging on. Hopefully everyone's got their Amazon Prime shopping done today, and we'll have your undivided attention. We're really excited about our webinar today. We had over 500 people register for this, so that's really, really great to see. And we'll get started here. Like I said, it's a couple minutes past the hour. We'll get started here in about 30 seconds. So bear with us. We're letting some people sign on still, so we'll get started here in a minute. Hopefully everyone's having a great month of October. And all of you are having fantastic years, so congratulations. Okay, it's 3 minutes after the hour. Looks like we have a good amount of people signed on. So good afternoon, everyone. Thank you for taking time out of your busy day to join us here. Today, we're going to hopefully make you a product expert in non-QM. My name is Jeanmonod, Regional Sales Manager for Angel Oak Mortgage Solutions, and been with Angel Oak over 6.5 years, and it's been a great experience to see us, how we've grown and continue to educate the marketplace. Some of you that have joined us on our town halls before are used to us giving an overview of what Angel Oak is and what we've done and accomplished over the last 7 years. We're not going to do that here today. Today, we're going to talk about products. We're going to dive deep, deep, deep into products. So we have the chat open. You know, as we go through each product, you know, give us some feedback, give us some questions, because I've got two people here with me today that are product experts, and they've been doing it for a long time. And I'd like to introduce Stacy Flanigan. Stacy's been with us for 6 years, Stacy?
Since 2013.
2013. So Stacy has closed over 600 units of non-QM. So she's got a great experience in non-QM, and I bet you there's not a question she can't answer. So Stacy, just introduce yourself and say hello to everyone.
Hi guys, thanks everybody for joining us. Such a great experience. Glad to help you guys get to know the non-QM industry a little bit more, dive down deeper into this non-QM world, which is continuing to grow and grow on a monthly basis, which is awesome. I've been, like John said, with Angel Oak since 2013. Absolutely love it here. This is like family to us. I'm a senior account executive in the Tampa Bay area, and love this fall weather at 90 degrees down here. And I just love non-QM. I did the old subprime back in the heyday, and my big thing with non-QM is I like to structure a loan and figure out how to fit the square peg in the round hole. I mean, that's exciting to me. I don't want the cookie cutter, cut and dry, pass DU, don't pass DU. I want to help you structure that loan. I want to help you make it work and get these people into their dream homes.
Thanks, Stacy. Really appreciate that. And then second person we have with us is another senior account executive with us, but he's part of a unique team. Eric Morganson and Bob Hutchens are a team that have originated over $600 million in non-QM. So Bob, introduce yourself and then tell us a little bit, what is a non-QM loan? So take it away, Bob.
Yes, thank you. I've been here, I'm in my 8th year here at Angel Oak, so I've been here since the very beginning. You know, I just refinanced at 2.5%. So I'm done, you know. I don't need another refinance. I'm not moving either. I got my banner all set up. I don't even want to move my banner. I'm done. I'm out of the market, you know, and I think there's a lot of borrowers just like me out there. You know, And then you factor in the half a point refi hit coming into agency. There's a bunch of borrowers in my situation that I'm off the market for a while. So what a great time to expand your product offering, which would include non-QM. Now, QM, as most of you know, that's a qualified mortgage. They're backed by the government. So the non-QM space fills that huge space between the tight agency guidelines and Section 32 high cost loans way up here. So that's the Section 35 HTML space. That's non-QM. A more general term is non-agency, which would include also all the investment transactions. Non-QM technically is a owner-occupied loan. Non-QM has the same ATR regulations as a QM loan, must have documented ability to repay. That applies to owner-occupied loans only. The regulations say, hey, you want to buy an investment property, go ahead, good luck to you. We don't have to document your ability to pay. So that's really that non-QM space. It's just a non-agency, non-qualified mortgage.
Thanks, Bob.
Back to you, Scott.
Yeah, thanks, Bob. It's a huge opportunity. Last year alone, there was $25 billion originated in non-QM loans, and they're projecting for 2021 for about $50 billion. And the opportunity in the near future is about $30 to $40 billion a month in non-QM loans. So today, what we're going to do today is we're going to take you through our programs. We're going to talk about, scenarios that both Bob and Stacy have closed and what to look out for when you're thinking about a bank statement loan or an investor cash flow loan. So let's, without further ado, we're going to take you to our website. I'm going to share my screen here, and if you guys can share with me if you're seeing my website screen here.
Yeah, I can see it.
Great. So what I'm going to do here right now is just take you to our website. It's a very intuitive website, easy to find, our quick quote tool. But what we're going to do is we're going to talk about some really unique technology later on and some marketing. But we're going to dive right into the programs, and I'm going to start out with our most popular program, which is our bank statement program. And I'm going to let Bob give you an overview of our bank statement program, and then Stacy and Bob, we can answer any questions that you might have.
Well, yeah, I'm Bank Statement Bob. I mean, I spend all day looking at these loans. My business partner, Eric's out in the field. He hunts them and I skin them. So I stay here chained at my command center and structure these loans. And, being a bank statement loan, that makes it non-QM, along with some other things that can make it non-QM, such as an interest-only payment, a jumbo loan amount above the high balance limits. Maybe you got a straight up conforming loan and it's full doc, but they own 20 properties. That's going to go into the non-agency space. And just banged up credit that doesn't qualify for conforming. So all of those type of things puts it in this non-QM space, primarily the bank statement loans. Here's the thing with the bank statement loans. At Angel Oak, we have our bank statement review team, our BSRT, and we're going to calculate the income for you up front. So now you've got a borrower that's pre-qualified, their income, and they know their exact purchasing power to go out there and find a home. So it's very important to get that income calculated up front. When you submit the loan to underwriting after they've been pre-qualified, you no longer have to upload those bank statements. Our underwriting team is going to pull that income figure directly from our bank statement team. It's all set. I get calls every day where the borrower, it didn't work full doc, and now they realize they need a bank statement loan and they're already in contract. And, it could get, you have to do some scrambling sometimes there. So, and these bank statement loans, these are generally the larger loan amounts, bank statement borrowers are the ones buying the big home up on the hill there. And you're paid on basis points. So it's a great way to get some larger loan amounts. And why not get that borrower pre-qualified and then hand them to that realtor you've been trying to get in front of? Hey, here's a pre-qualified borrower. They're eligible for a $750,000 purchase with 10% down. Here you go. Yeah,
Bob, you mentioned purchasing power. I mean, I've seen in cases where we've increased the borrower's purchasing power from 200 to 300%. So, larger, like Bob said, larger loan amounts, more commission for everyone involved, your realtor, you, everyone involved in the transaction. So,
Just
tell us, go ahead, Stacy, I'm sorry.
Can I add to that? So the bank statement, just to kind of give you guys more of a generic background on the bank statement program, is for those self-employed borrowers that have been self-employed or 1099 for at least the last 2 years. They can't qualify using their tax returns because what do most self-employed borrowers do? They write everything off. Maybe they'll be a little bit behind on even filing their tax returns. So this is a great program for those self-employed borrowers. And the great thing about the bank statement program is I've never had a client that has complained about the rate. No, they're not getting the 2.5% that Bob just got, but they're going to get a 5-6% interest rate, and they're not complaining. They're either, I tell a broker, if you have a hard time selling a bank statement program, ask the borrower, would you rather pay 6% interest rate, or would you rather pay Uncle Sam 3% of what you really make? It's an easy sell, guys. It's a great program. Once a bank statement borrower, always a bank statement borrower, because they're always going to have their write-offs. And going up to 90% loan to value with no MI, down to a 660 credit score. We do jumbos. We do up to 3 million loan amounts. I mean, this is huge. We also now just offer a 40-year interest only on this program. I mean, this is huge stuff, guys. This is awesome. So if you are not selling bank statement programs yet, please, call your AE, call your local AE, get started. It's extra money in your pocket of maybe a loan that you didn't think you could do. Like Bob said, we'll calculate that income up front for you. So you're going to know, and you're going to be able to tell your realtor what size home that they can start looking for.
Yeah, again, you just those loan amounts, I think, and it depends on where you are in the country, but I know I'm in the Dallas-Fort Worth market, and, my production on just non-QM was an average of about $275,000. And when it came to personal bank statements, it was about $320,000. And when it came to business bank statements, the average loan amount was over $400,000. So, as Bob mentioned, these are luxury buys. So, again, everyone involved in the transaction is getting a little bit more commission. So, we've got some questions coming in from our guests on here. So, what if you have a W-2 borrower and a self-employed borrower? Bob, what do you do in an instance like that?
That's a great question. Any of the payroll deposits would be backed out of the bank statement calculations, but you can absolutely add that income back onto the 1003 as you normally would on a separate line. You have your self-employed borrower and your W-2 teacher spouse, for example. Absolutely add that income back in. It's just not part of the bank statement income calculations. Same thing with Social Security income. You can back that out of we'll back those deposits out, but you add it back in on the application and provide the awards letter. Great question.
Yeah, and remember, all of you can ask questions in the chat. We've got some really great questions coming in. Bob, Stacy, I've got another question here. How do we calculate the expense ratio?
That's a really good question. So we have the personal bank statement loans and we have business bank statement loans. So we have a bank statement questionnaire that we formulated after COVID had hit that will be sent to either the borrower or the borrower's tax preparer. They can fill it out as well. This is going to help us decide or come to what an expense ratio we can use for the borrower. Some factors are going to be how many locations do they have? How many employees do they have? Or do they work from home and maybe they're a 1099 real estate agent with very little overhead? It also asks on that questionnaire point blank, what is your expense ratio? So by the way they answer these questions, we're going to be able to determine what expense ratio that we can offer. For example, you could have somebody that owns a construction company, pretty big, very successful construction company. They're going to have a higher expense ratio, maybe 70%. where somebody that is like a 1099 realtor, they work basically from home, they're going to be at a lower expense ratio of 30%. So the minimum that we do offer expense ratio is 30%. That means we're using 70% of those deposits, which is a really good, that's even better than we were pre-COVID. Pre-COVID, we were at 65. Now we're able to use 70%. On the personal bank statements, that one is also figured the same way. However, if you're using personal bank statements, one thing to really keep in mind is anyone on the bank statements must be on the loan. Now, if that borrower, co-borrower that's on the loan also has that W-2 job, like Bob mentioned, and we can clearly see the income that the co-borrower makes, we're going to use that primary wage earners mid-score, which sometimes will help. It doesn't mean that we're necessarily using the lower of the two scores. Kind of sidetracked there, Anya, but as far as the expense ratio on the personal bank statements, it also works the same way. However, if they have a business bank account, even though they're providing us with their personal ones, but they have a business bank account, we're going to assume all their expenses are run through that business account. So we're able to use 100% of the deposits on the personal statements.
Yeah, great. So bank statement, Bob, how do I get you these bank statements? And that, the one thing that, Stacy mentioned and Bob also mentioned is, we're going to calculate that income for you up front. So there's no guesswork. You're going to, when they provide you a pre-qualification or a quick qual, you're going to have that income calculated for you. So Bob, this is another question. How do they get you those bank statements, Bob?
Yeah, we have great technology here at Angel Oak, both from the broker perspective and as an AE, our system is such that I can, it really helps me to analyze these loans. So you're uploading your 1003 and credit through our quick qual portal. We call it a quick qual. There's no login required. Once you select the bank statement option from the quick quote pricing and qualification tool, it's going to open up 12 slots there for the bank statements. Now we offer both a 12-month and a 24-month bank statement option. You can just put them into a zip folder and upload it into one of the slots, or you can upload each one individually, or you can email them to me. So then those come to me for analysis. I'm going to look through, I'm going to make sure we don't have, I'm going to make sure we do have the most recent bank statements. So right now we really need them through September 2020. We got to make sure the business has survived this pandemic and has come out on the other side of all this. It's okay if they had to shut down March, April, May, but we have to see that recovery for a bank statement loan to make sense. So I'm also going to be looking through the bank statements to make sure they don't have excessive NSFs and overdraft charges. Hopefully they have some type of overdraft protection, which is the smart thing to do. But if not, and they're getting hit with a $35 NSF fee several times a month, that could possibly kick it out of being eligible for a bank statement loan. We'd like to see no more than 6 NSFs in each 12-month period. So all you do is you just upload them to me. Our system is such that I'm able to send it to our bank statement team right through the system. They get a notification. It puts us in line for review. The review is fast, 24 hours, sometimes faster. And then I get the deposit spreadsheet back, which I then share with you. And that's when we're going to apply the expense factor. Just one more detail on that. Stacy mentioned a construction company or a contractor. Yes, some of them, if you're a custom home builder, you're going to have pretty high expenses. You know, if you build a home for $500,000 and sell it for $400,000, guess what? That's an 80% expense ratio. But if you're doing remodels and that kind of thing, and you subcontract out all the work, you know, that could be eligible for a much lower expense ratio. So we're going to look at the actual business, but we don't need a CPA to provide this information. It comes directly from the borrower. We don't want to see a P&L or anything like that. We're going to maybe look at their website, for example. Maybe they have a salon and they carry some inventory, but all their employees are 1099. So, you know, we look at all of these factors to determine that expense ratio.
Yeah, and I know we're spending a lot of time on bank statements. It's our most popular program. So keep the questions coming in. I have another great question here. What if you have a borrower, Stacy, with two separate businesses? Can they use the bank statements from those two separate businesses?
Yeah, actually, that kind of brings me into a loan that I just did recently. It was a jumbo loan, and the guy has two separate businesses. Both of them, he supplied 12 months of bank statements for each business. We do allow that. One thing we're going to look for is making sure that the businesses do not commingle their funds. If there's any funds going back and forth between the two accounts, then it's going to be something that we will have to just narrow down to one, because otherwise we'd be double dipping that income. So, but yes, definitely we can use two businesses. Borrower has to be, if you're using business bank statements, which you would be in this case, borrower needs to be at least 50% owner of each business. And we'll definitely calculate the income for you on both businesses and let them use both.
Great, thanks, Stacy. Hey, keep your questions coming. If we don't get to it, we will have your local account executive reach out to you and get that question answered. So, Bob, any scenarios that you've closed in, say, the last few months that were really unique, that you were able to, take a deal that maybe, obviously didn't work on the conventional side, but even in the non-QM world, and you were able to kind of work it through the system?
Where do I even start? One more example on Stacy's answer with the multiple business accounts. Maybe we're going to look for the reason that there's multiple accounts. Maybe they have one account for their retail sales and one for their online sales. It makes perfect sense for them to have those two accounts. But again, we just don't want to see the money going back and forth. If I had two accounts, I could make $10,000 look like $1 million if I was given enough time to move the money around. So that's the reasoning behind that. I just see so many different scenarios. Just when I think I've seen everything, here comes another one at me. If I get a loan in, the first thing I ask myself is, why is this coming to Angel Oak? If it's a bank statement loan, that's obvious. If it's a full doc loan, maybe with a conforming loan amount, I'm going to look at that real close to see why it doesn't qualify as conforming. So maybe there's something that's not showing on the credit. So I just want to try to figure out why it's coming to us in the first place. If it's coming to us because it's a super unique property, that's not really a loan for Angel Oak. We need solid collateral. But we do offer certain non-warrantable condo projects we would allow. We allow up to 100% investor concentration, for example, as long as one entity does not own more than 20% of the units. But we don't want a project that has pending litigation, for example. So that's really the only type of unique property we do.
Yeah, keep the questions coming. I mean, we've got literally two of the best experts here. So keep the questions coming. I've got another question. Stacy, what's the score needed to get a 90% on bank statements?
So we'll do 740 mid score for the 90%. We'll go down to a 680 for 85%, and the 660 would get you 75%.
Let me add to that, John. It's important to note that we'll do that 90% loan she just mentioned to $2 million with no MI. I can't even spell MI. So we do these big loan amounts.
And the bank statements too are good for non-owner occupied, second homes, owner occupied, 1 to 4 units, condos. It's not just limited to a primary single family.
Yeah, so again, some other questions here, and I promise we will get to we'll get to our other great programs, but a lot of questions coming in, and if we don't answer them, we will get back to you with your local account executive, so I promise you. Also, we've had 18 enhancements since we relaunched since the end of April. So if you're not on our weekly newsletter, sign up for it, because we are rolling out enhancements. It seems like every week we're rolling out new enhancements as these loans continue to perform. So what are we looking for? Yeah, Bob, sorry.
Yeah, John, just the Tuesday email blast today was on the 40-year interest-only option. Now, what a great option to be able to offer these self-employed borrowers. The self-employed borrowers like to have control of their money, so they love that interest-only option. The great thing about interest-only is that the loan will recast if they make a principal payment. The first 10 years are interest-only. At the end of 10 years, it converts to a 30-year amortized loan based on the remaining principal balance. So they can pay that thing down over time, but those self-employed borrowers like to have control of their money, maybe to put into their business, or maybe their business fluctuates or is seasonal or something like that. So it's just something great to offer on these bank statement loans.
Another good question. It sounds basic, but what's the difference between 24 and 12 months? I know, Bob, it's 12, but why would a borrower use 24 versus 12? And
yeah, the only difference is they get an eighth better rate with the 24 months. But I see a lot of scenarios where maybe they've been in business for 2 years, and the first 12 months they were kind of getting it ramped up, but in the last 12 months they're crushing it. You know, that's a 12-month bank statement borrower there. It's pretty easy just to provide an additional 12 months, and we average it over the 24 months, and you save an eighth on the rate. So it's just case by case which way you want to go.
Also, too, if you do supply 24 months and we see that it's better in the last 12 months and works better, we'll switch it over for you to the 12-month bank statement program. And again, but like Bob said, it's only an eighth difference to the rate. The other time when you might use 24 versus 12 is maybe they got hit, like Bob said, they had to close down for March, April, and May due to COVID. So their 24-month average is better than their 12-month average. So if you can get all 24, get them, we'll review them, and then we'll let you know which way works, 12 or 24.
Yeah,
hey, John?
Yeah, Bob.
Yeah, this is a good time, I think, to just move into the 1099 option, too. It kind of fits in right here, but we offer a 1-year or a 2-year 1099 option, and we don't really even need bank statements. A great example is, like Stacy said earlier, the realtor. They've been at RE/MAX for 5 years. They provide their 1099 and a year-to-date earnings statement. If they don't have an earnings statement, we can use bank statements for 2020, but really they should be able to get some sort of commission statement or earnings statement. I did one for a State Farm agent. Now, they get multiple 1099s, but they're all from State Farm Auto, State Farm Life, State Farm Casualty. That's okay. What we don't want on that program is the consultant that's doing the 6-month gigs, you know, with multiple employers, and they have 20 different 1099s coming in. That's a bank statement borrower. But this 1099 option is super easy for the right borrower that has that basically one 1099 coming in.
Yeah. Bob mentioned realtors. Realtors love these loans, and as account executives, we do a lot of realtor loans. So we're going to talk a little bit at the end about how you can market yourself, and that's partnering with your local account executive by doing realtor presentations. I have a couple of other questions regarding bank statements, and we'll move on to our other program. Bob, you mentioned about looking at for NSFs when you get the bank statements in our bank statement review team. What else are you looking for on as far as income, deposits, assets? Can you help clarify a little bit of that?
Yes, we want some sort of consistency. You know, the borrower that maybe like they fix and flip properties or something, they have one big deposit over 12 months and then, you know, a couple grand every other month or something. But that might not make sense to us because we don't know when the next big deposit's going to come in. So we're looking for some sort of consistency. It's just got to make sense, you know.
And we'll move on to our investor cash flow program here, I promise, in a couple minutes. But Stacy, is a borrower with 18 months of self-employed okay, or is it a hard 2-year stop for self-employment?
We do require 2 years of being self-employed. I mean, that's a must. We got to be able to show that their business was in existence for 2 years, or if they don't have an LLC or corporation, maybe they're a house cleaner, lawn maintenance, then we're going to need a letter from their CPA stating that they've been self-employed in that line of work for 2 years.
Bob, did you want to add anything? I saw you were.
No, no,
I saw you
that's
were
good.
jump through the screen, Bob. All right. Again, if we didn't get to your question, we promise we will get your questions answered. But for the sake of everyone, we allocated an hour. We are committed to go at least past the hour for questions and answers. So keep your questions and answers coming. And again, we promise we'll get you answers if we didn't get to some of your questions. Anything else you need, Bob or Stacy, with regards to bank statements before we move on?
No, just get the income calculated up front. We help you with all of that. We'll make you experts at bank statement loans. It's really easy. I mean, what's a better indication of what a self-employed borrower makes? Is it what they report to the IRS after implementing the 70,000-page tax code? It's designed to help self-employed borrowers that are the job creators, and they don't report a lot of personal income. They're paying taxes in other ways. But, just the
opportunity.
So it's not what you report to the IRS. A better indication of income is what you're actually depositing into your account. We can see it right there. And we use that to meet the ATR regulations for documented ability to repay. And these loans performed very well.
Yep. Yeah, and just to put things in perspective, by the end of this year, they're projecting 57 million people will be self-employed. So that's a huge part of the market, the workforce out there. So, and again, we'll talk to you how you can market to those borrowers, but just keep that in the back of your mind. Okay, let's move on to investor cash flow. Stacy, you want to kind of give us a high-level overview, and then we'll dive into questions and answers and deep specifics.
So the investor cash flow, like the bank statement, this is probably our next biggest program that we offer. This is a phenomenal program. It's for investment properties only. We cover 1 to 4 units, and again, condos, non-warrantable condos. The way this program works is when you're taking an application, you're going to leave the income blank, you're going to leave the employment blank. I don't care what they do for a living. I'm not even going to know what they do for a living because you're not going to put it on the 1003. The caveat, they must own a primary residence. They own a primary residence. Maybe they're purchasing a investment property. They don't have to be a seasoned investor, which I know is a big question that comes up for me anyway. The loan is based solely on the cash flow of the property. So the borrower needs at least a 660 mid score. We go up to 75% loan to value. And what we're going to look at is the market rent on the appraisal. So when you order the appraisal, you order the 1007, which is the market rent analysis. As long as that market rent analysis covers your PITI payment by 100%, PITIA if they have HOA as well, by 100%, you're good to go. So for example, if your PITI payment's $1,200 a month, your market rent has to come in at least $1,200 or higher. You're good. That's all that's needed. It's a very easy program. Realtors love to be able to let their investors know about this program because they don't need the tax returns. They don't need the bank statements. They just go with the market rent. And obviously investors are going to purchase homes that they know are going to cash flow. Great program. I know when I do my pre-quals on this program, I am going to jump on Zillow or realtor.com, make sure they own their property, make sure that their current primary is not listed for sale. It's just got to make sense. It's got to make sense that this is a true investment property.
And I think Stacy probably, if she's not the top investor cash flow program person in the company. Stacy, can they close in an LLC? And if so, how many people?
That's another huge asset for this program. They can close in an LLC as long as anyone that's on the LLC is on our loan, and we allow up to a max of 2 people. And the LLC has to be for investment purposes. So if they own a barbershop, it can't be in their barbershop LLC. It has to be an investment LLC, and anyone on the LLC must be on the loan.
Yeah, and Bob, great. Keep these questions coming. Bob, I know you mentioned something about 20 properties earlier. What about how many properties can this investor own?
Unlimited. This loan is based on the cash flow of the subject property only, so we really don't care how many financed properties they own. You know, these borrowers that own a bunch of properties, their tax returns are complicated. So they like the simplicity of this program. It's just so easy. We do, like Stacy says, they must own a primary residence. This loan is not for renters where they could then easily move into the property after doing no income verification. So it's an occupancy compliance concern for us. It's not for the guy living in his mom's basement that decides he wants to become a landlord. You know, he buys the single family residence down the street. He could easily just move into the property. So it's just logical, and that's why we require that. Also, regarding the market rent, yes, we use the market rent from the appraisal on the purchase transactions, but maybe you have a refinance and the market rent maybe comes in a little low, but you have a tenant in there that's actually paying above market rent. If it makes sense, we would allow you to supply that lease and a couple months canceled rent checks, and we would use that higher figure. But we really don't want to see the lease agreement on a refinance up front with the submission, because it could be that the actual market rent is quite a bit higher. A lot of times you have a tenant in there that's a good tenant, takes care of the place, pays their rent on time, so they're getting a sweet deal on the rent. So always wait for that market rent figure to come in and then see if you need to provide the leases.
Yeah, back to that LLC, Bob. How long does the LLC have to be in, or Stacy, how long does the LLC have to be in existence? That's another great question here.
Yeah, that is a great question. There's no time frame.
There you go. Pretty easy.
Very easy.
Cash out, refi, will we allow? What's the season? Another question from the audience.
So to be able to use the appraised value, they do have to own the property for at least 12 months. So I know that is a big question that comes up a lot. If they want to refi it prior to 12 months, we can use the purchase price plus any major receipts from contractors, roofers, AC technicians, not receipts like you ran to Home Depot and purchased a bunch of lumber and nails, but actual contractor receipts.
Yeah, that's a great one. How many units can you do up to? Another question. Someone asked about 6 units, but what will we allow?
Up to 4 units, okay. Multifamily. Yeah. Just be sure that there's comps in the area that support the 4 units as well. Sometimes that might come into play. And go ahead, Bob. I think you're looking like you want to say something.
Well, just that we require the units to be tenant occupied. We're not going to do a refinance on a cash flow loan on a vacant property. So that's one requirement.
Yeah, if it's a refi, they must be occupied. We can't do vacant. If it's a purchase, then obviously they can be vacant.
I know, Stacy, you mentioned earlier about realtors and their group of investors that they have. Do you have a scenario recently or, within the last 12 months that you closed on this that, it was just, was it someone that didn't want to come in with 1.5 feet of tax returns or had multiple properties? Give us an example of something that you closed.
Couple different scenarios. One was actually on a refi basis. I did a refi for one borrower. He had multiple. He bought a bunch of real estate and investment properties. That's what he does for a living. He's an investor. Bought them all with a private mortgage. I refied 10 of his properties in 1 month and got him. I mean, our rates are really good for not showing anything. You're in the 6s, maybe 7s. So he got out of his 12% interest rate. I refinanced 10 of his properties at the same time and got him into the 6s. He was ecstatic. The broker was ecstatic.
And all our rates are 30-year fixed also. These are 30-year fixed rates. These are buy and hold for buy and hold borrowers, not fix and flip.
Yeah, and Bob mentioned it on bank statements earlier. We added the email marketing, the marketing email that went out today was for interest only. Well, again, like Bob said, self-employed people like to own their cash flow. Well, professional investors also like to cash flow. So we also have interest only available on this program too. So
here's another scenario for you.
scenario real quick.
Here's another scenario for you. You got that borrower that owns a bunch of properties free and clear, and they want to cash out and go buy more properties. I see that scenario just about every day. One thing on the interest-only payment, they still must qualify on the DSCR at the fully amortized payment, not the interest-only payment.
Great. Stacy, you wanted to add something there, so.
Yeah, when you were talking about the realtor being a purchase transaction, I had a scenario that I closed where the husband had like a 660 mid-score. They wanted to do the investor cash flow. 660 was only going to get him 70%. His wife had a 720, but she didn't work. And the broker's like, well, she doesn't work. I'm like, it's a no income, no employment loan. Let's take the husband off. Just do it in the wife's name. We were able to get him a higher LTV and a lower rate just by, talking it out. Call your AE, talk your scenario out. We're going to get you the best rate and the best program that fits the borrower's profile.
Yeah, I think that's key. Stacy, get in touch with your local account executive. If you don't know, we'll show you here in a minute where you can find your local account executive, or reach out to the regional in that area. Our phone numbers and emails are on there, so you can reach out to us directly. But another last question here for ICF. We're coming up on a quarter of the hour, or 45 minutes past the hour. Is there a prepayment penalty on this program?
Yes, it's a 3-year prepayment penalty. They can buy it out or down. They can pay upfront costs to buy it down to a 2-year, a 1-year, or no prepay, or they can add to their rate and buy it down to, again, a 2-year, a 1-year, or no prepay. The penalty itself, if they choose not to buy it out, is 6 months interest on 80% of the principal balance.
Guys, if you partner with one of the experts like we have on our call here today, you can make a great living just with bank statements and investor cash flow. It's just, these are so popular programs. So anything else before we move on to a couple other programs here? No? All right, let's move on to our Platinum Jumbo program. Bob, I'm going to let you cover this because you're like the king of the jumbos. So,
well,
and again, I'd be remiss. There's another half to Bob, and it's Eric Morganson. So I just want to make sure we get Eric our plug in here. So go ahead, Bob.
Yeah, Platinum is a great program. It's loan amounts up to $3 million. It's if you got a prime jumbo fallout that doesn't quite fit, the guidelines on Platinum are much more relaxed. DTI to 50%, for example, right there. The LTV to 90% with no MI required. Just anything that doesn't fit the prime jumbo or the conforming markets. We do go down to a 250 loan amount on this program, but it's generally these are going to be the larger loan amounts. And the guidelines are just more relaxed across the board with regard to credit score and everything.
Yeah, Stacy, anything you want to add here?
I don't get the loan sizes that Bob gets. That's why you put me on the investor cash flow.
Well, how about 4 years out of bankruptcy, 4 years out of foreclosure as compared to 7? Yep. Just some credit issues that can boot them out of the prime jumbo space.
Yeah, great point.
And these rates start at like 4%.
Yeah, and again, it's also full doc only, and it does have that 40-year IO option to it. And again, our programs are changing weekly. I can't stress this enough. Sign up for our Tuesday emails and get in touch with your account executive. They'd be glad to do a webinar for you for your office or for your realtors again. Anything else to add about Platinum, Bob? Any scenarios or just
5.375, 30-year fixed at 90% LTV. I don't even need to look at my matrix. I see so many of those.
That's awesome. That's awesome. Let's move on to Portfolio Select. Stacy, I'm sure you see a few of these. We just relaunched this program within the last 60 days. Stacy, if you want to give us an overview of this, and we can dive into some Q&A on this. And again, if we don't get to your question, I promise we will get your local account executive to answer your question for you. So please be patient.
The difference between this one and the Platinum, this one does go down to 125 minimum loan amount, and you only need 2 years seasoning for your foreclosure, short sale, bankruptcy, or deed in lieu. So that, if anybody was with us pre-COVID, we had this program back then. It's just a little bit better of a program as far as, I shouldn't say better of a program, but a program that helps those borrowers that had a 2-year foreclosure. Also goes down to a 620 mid score. So it's just that person that falls out of Platinum, either for a housing event or because their credit score is a little bit lower, or maybe their loan amount's a little bit lower as well. Again, full doc only, 50% DTI, and the interest only options available on this program as well.
Great. Bob, anything else to add on this?
Might be a good time to talk about forbearance. Now, excluding the investor cash flow program, that program is based on the fact that those borrowers are paying their mortgages on time. That's really all we're looking at. But on all our other programs, including the bank statement program, if they were in forbearance for 3 months, missed 3 payments, but they had 3 payments made on time after that, we're okay with that borrower. They missed March, April, May, they paid June, July, August, September. We will do that loan.
Yeah, and guys, we're talking about how these are larger loan amounts, people making more money. Stacy, share with us how the broker gets paid, whether it's borrower paid compensation or lender paid compensation. Can you share a little bit that? That's a question we have here.
Yeah, sure, absolutely. We offer both. We can do borrower paid compensation. That's where you charge your origination fee on the front end of the loan up to 3%. We don't do any high priced mortgage loans, so there is the 5% total fee cap. But you can make up to 3% on borrower paid, and on lender paid, we have a lender paid comp up to 2.75. The lender paid is a 2-to-1 ratio. So when you run Quick Quote, which John's going to show you guys all how to do, which I think is super, super important to learn how to price out a loan, or show you how to price out a loan. So when you see the rate that comes up, it's a 2-to-1 ratio for your lender paid, meaning if you add 75 bips to that rate that you see there, we're going to pay you 1.5 on the back. Now, if your lender paid comp is say 2.5, then we have to collect the other point on the front as a discount to give you your full 2.5, or whatever your lender paid comp plan is with Angel Oak.
Yep. And again, just reach out to your Bob. I'm going to let you talk about asset qualifier.
Well, asset qualifier, the way I like to explain this, there's asset depletion and there's asset qualifier. What is the difference? Asset depletion is a full doc loan with tax returns, which is then supplemented by depleting assets to get the DTI back in line. An asset qualifier loan, there's no DTI calculation. We're qualifying you just based on the fact that you have a bunch of money in the bank. So that's what this is. It's for that borrower that just has a bunch put away. We will use that to meet the ATR regulations.
Yeah, the instance on this, maybe the borrower sold a business a couple years ago and it, maybe has a non-compete, or there was a divorce agreement, or just think of things like that and work with your AE. They will give you the marketing materials and the ideas of how to market yourself differently. We've got a lot of questions here, and we're coming. Yes, Stace, sorry.
Just real quick on the asset qualifier, it's down to a 700 mid score, 75 LTV. Again, like Bob said, it's based on the assets. The one that I did was actually a pro athlete, where they didn't have 3 years continuance on their contract. They were already into their season, and they only had another year left. They had a lot of money in the bank. We only season the money. The money has to be in the bank for 6 months. So it's not like they can run out and just win the lottery and now they're out blowing it a month later. But it's for that person that has money, so had it in the bank for a minimum of 6 months. And like I said, the one I closed was a perfect scenario where I couldn't get it done on a bank statement or full doc. He was a professional athlete, so he was W-2'd. I couldn't go bank statement, and he only had a year and a half left on his contract, but he had a ton of money in the bank. So this was a perfect program for him. And if I remember correctly, it was a low 4 interest rate. So he was pretty happy.
Yeah, I mean, again, we have 2 experts on this call. You have a local one in your market. You know, you really need to if you've got something that's fallen out of anywhere, or you really want to market yourself differently than just, hey, I've got great rates, great service. You know, it's really a good opportunity. And this is a great way to segue into, we've had some questions regarding rates. If you could see back to our website here, non-QM quick quote. We also have an agency quick pricer here, but let's click on our non-QM. Bob, do you want to give me kind of a scenario to price out for you here while I've got the reins?
Yeah, notice there's no login required, first of all. You can use that slider bar at the top to put in your loan amount, but it's much easier just to type in the loan amount there if you want to, so you can fine tune it. But I mean, let's just do a bank statement scenario, like a purchase. The self-employed borrowers generally have a good credit score, so 740 maybe. Let's do a 90% bank statement loan here. Switch it now from full doc to bank statements. You can see that 3 clicks, he's got the rate there up on the screen, 5.875, 30-year fixed, 90% LTV, no MI. That took 5 seconds. Now you can go in and adjust it a little. Maybe you want to see what happens to the price if they put a little bit more money down, or if they want to cash out. You get the immediate pricing here.
So
once you get
Go ahead, Bob.
Well, just that once you get the scenario you want and you want to submit it to us, there's a blue box there below submit quick qual. That's where you go to upload the 1003 in credit and the bank statements.
Everything's done right here. Very simple, easy to use. And this is where you'll attach your 1003, 1008. And again, we're really investing in technology in the next year. So things are going to continue to get easy. So, but this is pretty simple, attaching a 3.2 file or 1003, and then your bank statements down here. So, like Bob said earlier, you just put them in a zip file and attach them there. Want to talk about, Stacy, you want to talk about the quick price, or no, we'll just go to the marketing, the portal?
Up to you guys. So just if you are pricing out a bank statement program, a jumbo, make sure you're clicking the non-QM quick pricer. Non-QM quick quote, sorry. The agency quick pricer, which is the button next door, that's our Freddie Mac program. We have a phenomenal Freddie Mac program as well. But I do have some brokers that will accidentally click on that and price out a jumbo. So just make sure that you're pricing out the non-QM quick quote. That's for any portfolio type loans.
Right. So we're coming towards the top of the hour here, so I want to be really respectful of everyone's time. So, but before we go there, came another good question. Stacy, you talked about borrower paid rate, you talked about lender paid rate. Can you kind of talk in this scenario, what we have up here, this bank statement program at a 60% LTV, and kind of clarify what the borrowers see, what the broker's seeing here?
Yeah, so as John was entering the information going top to bottom, he's got his loan amount, he's got his credit score. Like Bob said, you can play around with that. You can play around with your loan to value. You can play around with, hey, what if I rapid rescore this borrower and the score goes up? What happens if I go to the next level, which is the 760 and above? How does it affect the rate? Is it enough to warrant doing a rapid rescore? This tool is an amazing tool and so easy to use. The housing history, the property type, everything is, when you click on it, will give you a down arrow and give you options to select. The unit, the property type, you'll see the condos or the 1 to 4 units. The purchase, I don't mean to be going too fast, but the one that jumps on right now is you can select full doc, 12-month bank statement, 24-month bank statement, your no income cash flow, your occupancy type, which is the next one down. That's going to be your owner occ, your non-owner occ, or your second homes as well. So that's a great tool to be able to use. And then as you look down at the program, John just changed it to the no income cash flow. A lot of you guys know it as a DSCR program. So you have your program that's off to the left. The next box is your LTV requested. So you requested up top 60%, but it's letting you know, hey, if you need to go higher, you can go to a max LTV of 75. So if you want to see what a 75 LTV rate is, you just go back up to your LTV, switch it to 75% LTV, and now you'll see your new rate of 6%. Again, that's your borrower paid rate. That's where that's your par rate. You're gonna charge your origination fee on the front end. But if you wanna add 75 bips to that, or 50 bips, so if you add 50 bips, we're gonna pay you 1 point on the back, and then the rest of your lender paid comp would show up on the front end for your borrower.
Great. Yeah, so let's log in here. I know it's a few minutes left here. Again, we will go over. There's a lot of great questions. Bob, while I'm logging into TPO portal, the question came up about turn times. Can you share with people our turn times?
Yeah, they're fast. We have a separate pipeline for the non-QM versus the agency. But I mentioned before, our bank statement review team is fast, 24 hours or so. We always have it posted on the portal here. You can see non-QM is just a few days in underwriting, 3 days. So it's just super easy. You get your approved pre-qual, you request disclosures from us, we issue the disclosures, they do the e-signatures, you submit the loan, you get your approval in a few days, get us what we need to get that CD out. That pre-CD, which is not required on investment, but on owner-occupied, you do not have to be clear to close for us to get that CD out and start that TRID clock while you clean up any remaining asset conditions or whatever. So we get these done quickly. And then you can see the agency turn times are always posted there as well.
Yep. So one of the other things we talked about, how can you market yourself differently? And I want to, excuse me, I want to jump in here and kind of talk about this. We talked about partnering with, I know Stacy's done a lot of these, Bob has done a lot of these, as far as presentations on your behalf to your realtor referral source. So they will present, they go in there, they don't say anything about Angel Oak, they just say they're one of your investors, and this is a copy to we already have this canned. We have how you can market this as an event flyer here, and you can get this out to your referral source. We also have other ways to market yourself through social media. So we've done this all for you. It's really, really easy. So for asset qualifier, if you're marketing yourself to a borrower or are you marketing yourself to realtors, we've done it all for you already. We have the bank statements, we have the cash out, we have the investor cash flow. This is all available now. You do need login credentials to get here, but this is all available for you. It's done for you. It's so easy. We also have whiteboard videos. We've got flyers. These are pre-done for you. All you have to do is put in someone's been using this. So I'm not ashamed. Someone has been using it. So it's not you. Hopefully your name and information will come up here soon. But it's all done for you. You can see this flyer here right now. It's done. So we're really easy to work with. You know, our quick quote tools available 24/7. If we've got more questions coming in, someone asked a question about Foreign National, that program used to, Stacy, if you want to just refer to that, where it is today. And
we don't have that program back yet. I'm hoping it does come back. I do get a lot of people asking about that, but as of right now, I have no estimated time of when we can see that one come back.
Yeah, that might have been Carlos asking that anyway.
Probably.
I mean, that just the opportunity is huge. We talked about it a little bit earlier. I know we're at the top of the hour. I'm sorry for going past. We respect your time, but the non-QM market is still a huge opportunity out there. I think Bob has said it before. These self-employed borrowers haven't gone away. These professional investors haven't gone away. They're still out there. I know you've got refis coming in and stuff like this, but you need to really, really take care of your referral source. So I don't know if we have any more questions. That's all we have. I know we're over a couple of minutes, but really think about solidifying your referral source, because once those refi booms come out, like Bob mentioned during his introduction, he's done. He's at 2.5%. He's off the market. So really think about your referral source. And again, reach out to one of our subject matter experts, our AEs. We got 50 all through the country. Stacy's in Tampa. Bob works with Eric in California. Stacy, anything you want to close on, and then I'll transfer over to Bob and we can say our final farewells.
Honestly, just don't turn a loan down without calling your Angel Oak rep. I mean, even if you think it's far-fetched, maybe they can help you structure it in a way that you can get it done. Don't turn anything down. Don't say no to anything. It's a simple phone call or an email. Reach out to them and say, hey, I got this scenario. Let us see if we can do it or help get it done for you.
Bob?
Well, take your Angel Oak AE with you to a realtor presentation. Introduce them as your product specialist. No reason to mention Angel Oak. And I'll tell you what happens when you do these realtor presentations. At the end, it never fails. One of those realtors is going to come up to you. They need a loan for themselves. It happens every time.
Yep. I just did one yesterday and that happened.
Yeah, and you can see Stacy's contact information is here. Bob's also, Bob and Eric. Hold on, there's Bob and there's Eric. So again, I know we really didn't get to every question out there. We really respect your time. We appreciate you spending an hour with us. If we didn't get to your question, again, we will have your local account executive reach out to you and answer your question for you. We really appreciate, we look forward to growing your business for the remainder of 2020 and into 2021. We really appreciate everyone. Thank you for participating. Your questions were great. Thank you. Please reach out to us. Have a great afternoon.